Hey guys, it's Chris Clothier joining you again from the Grind Podcast. I want to say thank you for joining me today. Say hello to all the grindaholics out there listening to the Grind Podcast. I just earned $10 because the original bet was I would not work the word grindaholics into my Grind Podcast this week, but I did it in the first 10 seconds. Probably should double my return on my bet, but just the same. I am super appreciative of everybody that is out there listening, everybody that watches our podcast on YouTube. I enjoy making it. I really enjoy you listening to it. I love all the feedback we're getting right now. Thank you so much for the likes, for the shares, for the opportunity for, to get other listeners that you have invited over to it. The podcast and the newsletter are growing by right now over 1,000 subscribers a month, which is, look, it's fairly, it's amazing to us. It's kind of blowing us away a little bit that there's so much interaction and so much interest in what we're doing. But look, we love doing it. This is what we're good at. We like talking about entrepreneurship. We love talking about real estate. So as long as we keep it there and that's what we talk about, there's a few topics that we stay away from. And that's why the podcast is as good as it is, I guess. Listen, I get a lot of questions that come through, which is another thing I really appreciate. And this week, I'm going to talk a little bit about one of those questions that came from one of our listeners. And the question was, can I talk a little bit about returns that we should expect in real estate? And I'm going to answer that question privately, reply back to that person so they can kind of get more detailed. I'm going to send that reply back on the podcast itself. I'm going to kind of change the question a little bit. You should see the reaction from the people behind the camera right now. They're like, oh my gosh, did you really just say that? Yes, I'm going to answer that question because it's really difficult to do that here in a 15-minute podcast. I'm going to kind of change the question a little bit in the way I'm answering it, in that I want to make sure I help business owners out there and investors the same kind of line up and get aligned. It's one of the things that has helped us as a company so much. It's helped us to meet the expectations of our clients so much because we set the proper expectations, not only of experience, but also of return on the front end. So let me dive straight in and do my best to kind of line this question up for all the real estate listeners out there and the entrepreneurs. So listen, for real estate, the number one way to set your expectations for earning a return, and this doesn't matter what investment you're making, how you're investing, none of it matters. Here's the number one expectation you should have of return, and that is a return of capital. So regardless of what you're doing and how much capital you put in, the number one rule of real estate is don't lose money. Right? That's what they've always said. Now there are, and I won't, again, this is where it kind of gets funny. I won't get into all these different ways, but there's a lot of people that lose money on purpose in real estate because they write it off against other investments that they have. I'm not talking about that. We're talking about the beginning investor, the early investor that's looking for, hey, how do I properly set my expectations? And I really feel like that's where the question came from. So the number one way to set your expectations is to understand that you need to invest in a way that's secure and that you're going to be able to get all of your capital back. Anytime you can make an investment and get all of your original capital you put into it back, it's not a bad day, that's for sure. It may not be what you were expecting, but it's positive nonetheless. If you can make a real estate investment and not lose money, you're in the upper half of those that invest in real estate. So, and I'm not saying that half the people lose money. Let's make sure I'm clear with that, but you're definitely on the right side. Okay. So how do I set good expectations and what returns should I expect? Well, let's first look at the time we put in. How much time do I need to put into this investment on top of money I need to put into this investment? So if your time is zero, you make a completely passive investment, then your expected return should be relatively low. If you're able to track with slightly above inflation, I feel like you're doing well. If you can put your money into an investment that requires none of your time and you have a high degree of certainty that I'm going to at least earn at or above inflation on my investment, you've done good. You're going to get some other ancillary benefits out of investing in real estate, but you spent none of your time. You literally put your money somewhere where you were able to not lose the buying power. Number two, if you take a little bit of your time, it's mostly passive, you should expect a higher return. There's a lot of stuff you can do today that requires very little time, very little effort, that you should be able to make between 5 and 6% on your money. There's a lot of listen, anybody out there that works with investors or advises investors, I'm not giving investment advice here. I want to be very clear on the front end. There's a lot of people that can say they can make you more, they can do better, and they probably can. I'm talking strictly, hey, high level, what should my expectations be? You should not go into an investment that's going to require your time and take less than 3, 4, 5% on it, unless you're a savvy, experienced investor and you're doing it for other purposes. As a new investor, set a floor and say, I'm not going below this. The more time you have to put into an investment, the higher return you should get, because you're not only investing your money, but investing your ability to make more of it. The more time you use on an investment, the less time you're able to use on other things where you can earn income, earn capital. So the more time you spend in real estate on an investment, the higher your return should be. I routinely am able to make a double-digit return when I factor in all the different ways I make money in real estate. Okay, so my floor that I like to have would be roughly a 10% plus return on anything I'm going to do, any dollar I'm going to spend, and I try and spend as little time as possible with those investments. Most of my investments I try and make are hands-off, and most of them are completely passive. How can I get that kind of return? Well, I'm more of an experienced investor. I've got other avenues in which I earn a return against what I do. I'm talking about the time value of money. I'm talking about the tax benefits I'm able to achieve. But again, as I go back to an original starting right out the gate investor, you need to figure out what a floor is. You also need to understand what you're capable of earning. Listening to advice, like even my advice right here, if I were to tell you strictly that you need to be making 10% plus on every investment you make, dollar on dollar, listen, I don't know that you should listen to me if I make that kind of a blanket statement, because I'm in a different scenario. Each of you listening out there, you're in a different scenario. You're at a different stage of investing. What you need to do is understand, what are you capable of earning? How much time is it going to take for you to get there? And then what does your floor need to be? And all of us, it's easy to invest in lots of things like the stock market and put money in, or cryptocurrencies, or the fads and the things that are out there right now that are hot and get us all frothy, ready to go. The reality is that we have to be able to understand the investment we're making, why we're making it, and what our minimum expectations are. I go back to the very beginning of what I said. If your minimum expectation, look for what are the minimums I should accept. The minimum you should accept in any real estate investment is I'm going to get a return of my capital. Once I'm relatively sure that I can get all of my money back, then I want to do whatever I can do to get the highest return on my capital, right? So invest in things where you're not going to lose money, then get the greatest return you can get without changing the parameters. Not having to put more of your time in, not having to take greater risks. Fair enough? It's really it's a hard question to get any deeper or more analytical than that. So how does this factor in for entrepreneurs? When you have a business out there, especially one where you have a business where people may be seeking or have an expectation and want something in return. I go back to what I've said so many times in the past about, when we learning to say no. That's one that we touched on here recently. Knowing who an ideal client is, having an avatar, a picture of who do you want to attract to do business with you. For me, I want to attract people who value, number one, their time. I don't want to do business with people that think that they can do better as an investor than I can with their own time, their own efforts, their own, doing the work themselves. That type of investor is not a perfect fit for me. That's an investor that's going to devalue my time because they value theirs so much. But the inverse of that is somebody that also values their time so much that they value mine as well. This is somebody that says, I cannot make the return with my own time that you can make me if I can get you to spend your time on my property earning me a return. Does that make sense? So we're looking for, me personally, I'm looking for somebody that says, I truly value my time. I value your time so much that I want you spending it on me. I want you spending your time on earning me a return on my investment. And that for me is somebody that's ideal. Somebody that walks through the door and says, my next layer of being an ideal client is I want, with the highest degree of certainty, my money back. So I don't want to invest in houses that have any probability of losing, any probability, certainly a high probability of going down in value. I don't want houses that are going to be not in demand, that are going to be hard to keep occupied. I don't want houses where I'm going to have to rely on, certain services and programs to be able to keep them occupied. I want high demand from the general public for the property I'm investing in. When somebody says that to me, ideal client. That is somebody that wants exactly what we bring. And then lastly, because they want that high degree of certainty that they're going to get their money back, and they value their time and my time, they're going to understand on the beginning that, hey, this is going to paper out as a good investment, but it's not going to paper out like it's a grand slam. This isn't going to paper out like it's the greatest investment I can make. But over time, by compounding it, by the ability for me to leverage even a little bit, I can amplify my results of this investment. By being able to take advantage of tax advantages and the resident paying down my principal, so through principal reduction, through appreciation of the asset itself, there's so many different layers of which I can make a return. But yet the security of it, the risk I'm taking doesn't go up. That's the investment I want to make. And that's the client that is perfect for me. That's the person I'm looking to attract. In business, put out a product, a service, whatever it is, that attracts your ideal client, okay? That put out a service that even if it's a small segment of the population, I understand that real estate investors, I'm talking to a very small sliver. A majority do not want what I offer. A majority want much higher returns. A majority want the higher risk. They want to roll the dice because they want the opportunity to hit, grand slams every single time. And that's okay. I'm not talking to them. I'm talking to that small sliver, and I try and, approach it and position my business where I'm the best option for that small sliver of the real estate investment community that wants precisely what I bring to the table. In any business, if you can find that, that's what you want to offer. You want to let everyone else compete for the big piece of pie. You want to be the outlier, the lone company offering that small, slice of pie to just the right ideal client. And then when you are an investor and you're looking for what kind of return should I expect? Look, it's such a broad, open-ended question that the reality is the returns you should expect are, number one, you're not going to lose money. You should expect a return of your capital. Once you get comfortable with that, then you figure out how much time do I need to put in? How much capital am I going to put in? And then how can I just maximize return on it? Guys, thank you for joining us today for the Grind Podcast. Keep sending your questions in. I'm going to look to keep answering them. I appreciate it, man. I hope you have a fantastic weekend. And until we come back together again, to all the grindaholics out there, commit to the grind. I appreciate it, guys. Y'all take care. We'll talk soon.